many individuals or many entities will form an LLC. They will go to the IRS website, get an EIN, for their LLC and not do anything else. And then when it comes to tax time, they will come to me or another CP and they say, hey, I'm an LLC. I want to file a separate tax for my LLC. When they say that, in the back of my head, I'm laughing because there is a good chance that they have missed a step when they were doing their EIN incorporations. Therefore, you are an LLC on paper. Let's start with part 1, understanding forms of business and organizations. Also, we have called this materials importance of good records or basic accounting 101 and taxation 101 as well. The point I'm trying to make is that to give you a general an idea of what accounting is and what are taxation when it comes to filing your taxes as a business owner. I always say this, please seek the advice of an expert like me or someone that you trust who is an accountant or a CPA. Here are the course objectives, and these objectives are for all of our 6 parts. We're going to go ahead and now dive into part 1, understanding forms of business organizations. Okay, when beginning a business, you must decide what form of business entity to establish. I highly encourage you to consult with an attorney, an accountant, financial advisor, or other business or legal advisors to determine which form is most suitable for your business organization. These are, the simple ones. Sole proprietor, the guy or the girl who has a side business, the Uber driver, the DoorDash deliverer type of a thing. Partnership, which is 2 people coming together to establish a partnership. Corporations, big companies, the Fortune 500s, the Amazons, the Boeings, the Microsofts. Limited liability companies, which is, a new type of entity for the last 20, 30 years, that majority of small businesses use it to incorporate their businesses. We're going to go ahead now and dive into each one of them specifically, okay? And I want to just disclose this. Every state is different when it comes to incorporating your business. We have 50 states, and each state has its own rules. So please make sure that you check with your Secretary of State requirements when it comes to this. And also, by hiring a professional, it can make the transition easier for you or the incorporations. I'm in Washington State, so I'm going to go ahead and talk about the Washington State business structures. You might operate your business under any of several business structures in Washington State. Each type of structure has advantages and disadvantages that should be considered. Remember, consult with a professional before starting the incorporation and license process. One of the biggest mistakes small businesses make is that they do the incorporation themselves first. And there are other steps that they miss. For example, when it comes to IRS, there is a certain window you have to have in order to qualify for some tax advantages. So if you miss that, you have to wait for another period and maybe end up paying higher taxes for that. So always seek the advice of a professional. So in Washington State, you can be a sole proprietor, you can be a GP, general partnership, LP, limited partnership, limited liability partnership, limited liability company, corporation, or not-for-profits. There is a link you can click here that will take you to the Secretary of State that will give you definitions of these entities. And I'll do the best I can to provide general definition of these organizations. Here, this is really the easiest of all. It's a sole proprietorship. It's a business with only one owner. The owner is the manager. The owner makes all the business decisions. And the owner is responsible for all the liabilities of the business. That is in red when I say liabilities, meaning debt or anything else that's against the business. By placing your assets at risk, they can be seized to satisfy any business debt, any legal claim filed against you. It's just simple to form and operate. You enjoy a lot of flexibility. There is no minutes like corporations do. There is no legal control. And when it comes to filing your taxes, you will just file your 1040 plus Schedule C. There's a disadvantage to this entity, and that is you're placing your personal asset at risk that could be seized to satisfy any business debt or claim against you. It's also a target for audits when it comes to the IRS because it's easy to mix your personal and business expenses. I highly discourage from operating your business from a sole proprietor unless it's a very, very, very simple business. The next entity in Washington State, or generally in other states, is the partnership. There are many types of partnerships. For example, dentists, lawyers, accountants, architects, engineers, they have partnerships. It can be a limited liability or general partnership. For Washington State, only limited partnership and limited liability partnership, LLB, must register with the Secretary of State, which is a division of the corporation. A partnership is really a business owned by two or more persons called partners. It can be a silent partner or they can both be general partners. The partners share the management and the decision making of the partnership. Each partner is responsible for the debts of the business. GP, which is the most common general partnership, is composed of two or more persons, usually not a married couple, who agree to contribute money, labor, and or skill to a business. Limited liability partnership is composed of one or more general partners and one or more limited partners. Usually they call it a silent partner. It basically means that me and you are partners, and one of us will be the one who will be doing the day-to-day operations, and one of us just waits for, in this case, to collect, interest, dividends, or the profit and stuff. So that's also another form of a partnership. And usually partnerships will file Form 1065 with a Schedule K for partners. For taxation purposes, this entity does not pay any taxes. The partners will pay the taxes. And we'll talk about that later on a different slide. Here is another, in more detail, the types of partnership and LLC. In Washington State, when you are incorporating your business as a LLC or partnership, it's a must that you must have an operating agreement, which is a legal document that's used by both managing partners and owners of companies to negotiate and form the policies and procedures of their company. It's your RCW, it's your WAC. In Washington State, an RCW is the Revised Code of Washington or the Washington Administrative Code. You can also say it's your Bible or it's your Quran. In the event of disagreements, the court will look into your operating agreements. If there is no operating agreements, you are at the mercy of the courts to decide when it comes to any disagreements between the partners. Also, you need an articles of organization, a document that establishes the existence of an LLC in the United States. You also need an articles of incorporation, also referred to as certificate of incorporation or the corporate charter. Another entity is the limited liability company. is an LLC. An individual can form this. More than two can form this. A company can form this. As I said on my slide, it's formed by one or more individual or entities through a special written agreement. An LLC is a hybrid entity, bringing together some of the base features of a partnership and a corporations. LLCs were created to provide business owners with the liability protection that corporations enjoy without the double taxation. Earnings and losses, this is, profits and any losses, can pass through the owners and are included in their personal tax returns. I want to pause here for a moment. I want to take a moment here on the LLC because this is really, really important. Many individuals or many entities will form an LLC. They will go to the IRS website, get an EIN, for their LLC and not do anything else. And then when it comes to tax time, they will come to me or another CP and they say, hey, I'm an LLC. I want to file a separate tax for my LLC. When they say that, in the back of my head, I'm laughing because there is a good chance that they have missed a step when they were doing their EIN incorporations. The first thing I asked them for is, can you bring your CP letter? A CP letter is a letter you get from the IRS when you are getting an EIN. They will bring that. And then I'll ask them, have you done another step? They're like, what step? And I said, aha, you missed it. Therefore, you are an LLC on paper at the state level. But when it comes to, for federal taxation purposes, you are considered a sole proprietor if you are the only member of the LLC because you missed a step to do what they call either a c-corp or an s-corp. For the purpose of a c-corp, you have to choose and say, I want to be treated as a separate entity. I want the entity to file its own taxes. Also, if you want the LLC to be treated as an S corporation, you have to make an election within 75 days of your incorporation time. And there's a form called Form 2553 that you have to fill in and either fax or mail to the IRS in order for you to be treated as an S-corp. So LLC is a tax structure that's very unique, and I will highly encourage you, if you're thinking about going this route, that you talk to an attorney or a CPA when it comes to doing this. Just FYI, an LLC will most likely, here when I say common tax form to file, will file a 1040, the Schedule C, because you forgot to file the Form 2553. You will file Form 1065 because you chose to be treated as a partnership. If there is two or more of you, you can file as the 1120S because you want to be treated as a small corporation and you have completed Form 2553, or 1120, which is considered a disregarded entity because you want to be treated as a C-corp. Okay? Another entity is the corporations, the C-corps. As a small business owner, I will highly encourage you not to form your business this way because it's a form of a double taxation. It requires more documentation. There is also a lot of requirements required. So let's go through these requirements. It's a business that operates under a government charter, a legal entity, separate from its owner and its shareholders. Think of a C-corp as individual. Even though they're not a person, but they're individual. You as the owner, you also are individual. So you treat it separately, okay? It's more complex, more expensive than most other business structures, has certain rights, privileges, and liabilities beyond those of an individual. Biggest benefit of a business owner is the liability protection he or she receives. So in the event of bankruptcy or you get sued and stuff, there is a corporate shield that they have to go through before they get to you and stuff. Debt is not considered that of owners, not putting your personal as a risk, but you can also be a grantor. Owners are called shareholders or stockholders. And these are the forms that a corporation that chose to be treated as an s-corp will file. In order to be treated as an s-corp, you must elect the 75 days, 2 months plus 15 days at the beginning of the tax year. An LLC can be treated as an s-corp if it elects. There is more documentation required, bookkeeping, accounting, all that stuff, if you go this route. Most corporations are big companies, the big companies that you know, the Amazon, the Microsoft, the Boeings and stuff. So small businesses usually do not go this route. They do an LLC, or then they do an s-corp when it comes to their taxation and stuff. So if you're a small business owner, I would say before you go that route, talk to an advisor.